Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome. My name is Brandon Wendell, Chartered Market Technician, and I'm going to be doing a little bit of analysis on the U.S. Equity Futures Index, or Futures Equity Index Futures. Excuse me, can't speak today. Anyway, I'm starting off, as you can see here, with a comparison chart of all four markets. If you go to my YouTube and do a search, you'll actually see I have a video here called Follow the Market Leader, and in that Follow the Market Leader I did over a year ago, I actually talk about why I use this type of chart and what I'm looking for and how I actually create this chart as well. So what I'm doing here is looking to see from the January 4th highs, basically who is our leader to the downside, and that'll tell us when we're likely to bounce if we are. You can see that we have the Nasdaq as our leader to the downside, making the biggest moves and the first and farthest moves to the downside for these equity indexes. Meanwhile, the Dow is showing a little bit of strength underlying because it is the strongest out of the markets, with the S&P kind of second, Russell caught in third position there. So what we can do is go ahead and take a look at the Nasdaq first, and I'll shrink this down and jump over there to the Nasdaq, and I'll close out my YouTube as well. And we'll go ahead and go to NQ, and I'll use a continuous contract just in case we have to look back further. We've obviously done this before with the analysis, or I have. And you can see we've got drop, base, and a bit of a rally. So we actually have a weekly demand zone that we've come into. You can see that we bounced off of the weekly demand just barely 2 weeks ago. And now it looks like we're getting ready to resume the downward trend. This is not a very strong trend or demand. And the demand zone has too much momentum to the downside, too much bearish momentum, meaning we're probably not going to be able to hold that. And we're likely to see a push to, well, through that area. If we look further down and left, we can see that we've got another area of demand that is going to be our next target, and that is right here at 11,503 to 12,139 for your next level of untested demand. Really, this could actually be considered to be a retest of this area anyway. So it looks as though we're getting ready to continue our march downwards. You can see on the last candle last week, we finished with lots of selling pressure on that candle. We haven't followed through yet, obviously. We have to wait for Sunday for the open. But this is looking pretty bearish and likely that we're going to continue to push down to test that 12,000 area. Dropping down to the daily time frame, well, let me go ahead and clean my chart off here first. And I'll put in a horizontal line to mark the lows. Taking a look back to see if there's anything else in the way. As far as demand, we already have this area that we've come into before. So we're going to be making another test of this area. And I just want to check to see what's behind this. There we go. And the reason why I'm doing it on the Nasdaq, again, this is the leader to the downside, and the markets would continue typically to move to the downside until that leader finds a really good demand area, and then we'll bounce. So we've got quite a few demand zones below. The first one, as I came to here, going back, you can see it's actually a tested zone, and that is the 12,975 to 12,609. We have a little drop, base, and rally. We've tested it, so we maybe go into the untested portion, which is 915. So the 12,915 being the untested portion of the zone as we are currently getting ready to move back down. You can see we got lots of bearish momentum. We had a small divergence on the daily chart. Well, actually, no, we didn't, because this is a low and a lower low. I was thinking you could count this prior low, but you can't skip. So really, we just have lots of bearish momentum, and it looks as though we're getting ready to, next week, push down to at least the 12,915 before we get any kind of significant bounce. I'm going to go ahead and delete this. There we go. We do have overhead supply on the daily time frame that we tagged on Thursday, it looks like, before we started moving down. So going to the smaller time frame, the 4-hour chart. Oh, hit the wrong keystroke here, sorry. And 240. There we are. Let's see, we've already got a couple things marked off, but that's from a lower time frame. I want to start fresh here, so let's do that. I'm going to clear this chart, and you can see we've got really no trend. We got higher highs and lower lows. We can't seem to get above 60, but we can go below 40, which gives us an overall bearish feel for these markets, a bearish trend. As far as demand, well, we've tested it. Drop, base, rally. You can see, and we're going to be able to get through that this time. So it looks as though our first move down, well, we've got, let's see, the high here is 342 and the close 340, so this is part of it. That's our next immediate level of demand at 13,340 for our move to the downside, where we might see a little bit of a bounce, maybe Monday morning, probably not, maybe even Sunday night, but most likely Monday morning. You see how strong this bearish trend is. As far as any other demand zones below that, we can go back and take a look to see if anything exists. And now we'd have to go back to that continuous contract. So instead, I can also take a look at the Fibonacci extensions by going back to the daily time frame. And what I measure is our most recent impulse, which really, I guess you could say, started here, impulse down, corrected back up. And there's your first target inside of that area of demand. We go back to the, oops, again, wrong keystroke. That's the problem with using so many different trading platforms. You use the wrong keystrokes and the wrong platform. Anyway, we've got our target number one, our move down, obviously at demand, but inside the demand, 13,132 to keep an eye out for. And then below that, you've got 12,354.50, and then all the way down to 11,800 if we continue to slide. So what I'd look for is shorting opportunities on Sunday going into Monday, looking at the 60-minute time frame just to see if there's anything there for us to short. And no, it doesn't look like there's anything really fresh as far as good supply. It's a little choppy, but the overall trend is still strong downwards, as you can see. We did have a little bit of divergence where prices made fresh lows. However, the indicator made a slightly higher low. Let me just change this real quick. Just want to make sure the colors aren't the same. My lines as I'm using for the RSI. There we go. So we can have the contrast. But anyway, that's a positive divergence. And it would suggest a little correction, which is pretty much what we've had, that little bit of a correction already. So I don't see us popping up to the upside any more than what we've already done. As far as a downtrend, it is still pretty strong, I believe. Kind of cut through a little bit there, but that's the overall downtrend. And I can extend it off to the right as well. There you go. Just give you an idea. So now if we're looking for trade opportunities, I can go all the way down to the 15-minute time frame and look to see if there's anything that we could use as an entry. Unfortunately, it's kind of ugly. This is a rally, base, and drop. It did make the new lows after the leg out, but we failed to breach prior lows on this. And you can see we already retested pretty deep in the zone. So I would actually wait to see if new zones form on Sunday or even Monday, depending on where we gap open, if we do, or if we have opening range breakouts. But as far as halting the move to the downside, I don't see anything here on the Nasdaq that tells us we're going to stop until we reach that low 12,000 area that we talked about in the higher time frames. So that's what I'd be looking for here. We can go into the Russell and once again jump up to the bigger time frame, the daily chart, and I'll start off with a cleaner chart. We've been going pretty choppy sideways, but overall a little bit more bearishness. As you can see, we could barely get above 50, let alone 60 on the RSI, but we have no problem going below 40. So lots of weakness in price. This market does definitely want to drop. I'm going to need to go to the continuous here for a moment just to be able to look back. And you can see I did some extension work before. My first target is at 1859. If we go back a little further, we've got 1707. Let's just take a look back to see below these lows if we've got any sort of demand. There we are. And looking back, we got a big rally here. But as far as any kind of demand, maybe at the origin of the move. I don't know about anything else along the way. You know, if I start looking at things, we've got rally, base, 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 and rally. That might work. We've got 1792, 1751. Nothing great right in here. Again, the origin of the move is probably the next one I would be considering seriously, which is right here. Although, maybe a retest of prior. Maybe not. We can call that a separate zone. And the one below, if you want, is here. 1467, 1426. But obviously we don't worry about that until we get through the others. We're probably not going to reach that this week. What I see is, again, more bearishness. We may get a little bit of a pause at the fib extension of 1859, but ultimately by the end of the week, we're probably not going to make it down to 1792 unless we have a really, really bearish move to the downside. But overall, I would expect this to at least retest the 1900 level. Going into the specific contract again, and dropping down to the 4-hour. We don't really have anything going on. We've been up to these highs quite a few times. We don't really have any serious zones that I could use for trading. As far as the downside target, there is a good demand zone right here. Drop, base, and strong rally, 1883.1 to 1917.4, and that's all I got. I haven't really formed any other new zones nearby. Dropping down to the 60-minute time frame. I'll take a look around here, and we do have that area. Same area of demand. We might be able to fine-tune it just a little bit using a rally-based rally off the lows. There's actually another small zone above that we might get a little bit of a bounce. These are really more targets for shorting opportunities. They're not necessarily opportunities to go long because the overall trend is bearish. So we're just looking at these as possible pauses in 1944.7 and 1906.9. As far as shorting opportunities, I don't have any really good supply zones, so we have to wait for something to form, or again, trade gap play or opening range breakouts. And the E-mini think tank actually go into all those different strategies and teach them in detail and have some videos that support it as well. So you can always check that out there. Anyway, going down to the small time frame, 15-minute, you can see just overall downtrend, lower highs, lower lows. And we just took a little breather here at the end. Not sure if that's going to be turned into a double bottom, but you have first and second, and we would have to break out of the so-called neckline right here, kind of approximately in that area, if we're going to be able to see a reversal. But if anything, if we do reverse based on that double bottom, I would say it's just going to be a short-lived move. As we push back up, we got a really great supply zone. This would be an awesome shorting opportunity. Just put in my, there we go, anchor mode. So you're looking at about 2034.4, 2036.4. You got rally, base, and just collapse right there. There is another zone just below that. We can also look at this 2021.2 to 2028.5. And one's already been tested, and you can see it worked really, really well. Lots of selling pressure. So if there's a little bit more pressure left, we could use the untested portion at 2022 to 2028.5 and look for another move to the downside. That would actually be the measured move anyway for the, that double bottom right there, if you will. You can see you duplicate that on the breakout. Kind of takes you up into those zones anyway. So that's what I'm seeing as a possible shorting opportunity entering around 2022 to 2028 or 2034 to 2036, targeting 1944. Moving on to the S&P. Start off on the daily time frame here and refresh this. And again, big bearish downtrend. So looking at the big moves down, you can see we had a lot less momentum, therefore we had a bit of a correction, but the overall downtrend is still intact. And we are extremely bearish in this market. I think the most, from the highs, currently we are down about 10%. Yeah, I'll look at that, exactly 10% from the high. And that's the January 4th high to where we closed on Friday evening. So anyway, I see us being able to continue to move to the downside. There's really nothing to hold us up. Let me go to the weekly here. And this is contract specific, but you can see we do have a demand zone. Rally, base, rally right there. That could take us down below 4,000, 32.96. Now, that's not going to happen this week, but ultimately I see us continuing to move down. We haven't broken below 40 yet on the weekly chart, but once we do, that's where we're going to be seeing lots of selling opportunities and continued pressure to the downside. So as of right now, bearish trend. Yeah, let's see, we're on specific. Good. So what do we have? As far as zones, I don't know if that actually qualifies, but it looks pretty close to a supply zone right here. Oops, that didn't take. There we are. So we got rally, base, and drop at 44.22 to 44.84. It's very, very wide. As you can see, it worked. There's lots of selling pressure there, and on Thursday we kissed off that, started moving down quite a bit. So wouldn't expect it to be able to break if we did another test, but honestly, I don't know if we're going to be able to rally up to it. Going to the 4-hour time frame, again, you can see I've been waiting for us to move up and test the 4-hour supply all week last week, and we just never did it. We never made a new low either, though. So overall, the markets have just been choppy. You can see we can't get above 60. We can't go below 40. We're just sideways since the 25th of February. That's just choppiness. So if we do start to break out, really, you can kind of highlight this sideways motion. Which one is it? Here? No. There. And let me take that off. We're just kind of stuck in this range right here. So if we do break out of the range, most likely the first target we're going to go to is this 4-hour demand zone right here. Yeah, drop, base, rally at 41.59, 41.01. Again, kind of a wide zone, but that's what you got on this 4-hour time frame. Because of the increased volatility, it increased the size of the zones. So if you want to combat some of the risk that you have to go to a lower time frame in order to be able to offset that. Anyway, that's what we're seeing right now. If I go down to the 60-minute time frame, see if we can get any better entry points. I'll go ahead and get rid of this sideways motion box that I had, and I don't have any good zones, really. It looked like this was going to be something. It doesn't qualify and didn't break to new lows. We stalled out. So I don't see anything on this time frame. Perhaps you could say rally, base, drop. Tested, though. And they say that may be a good zone because it didn't follow through, but it did break prior lows on the initial leg out. Anyway, going down to the smaller time frame on the 15, because, well, actually, before I do that, 60-minute, the overall trend is bearish here. We had a slight bullish trend going back on the 2nd and 3rd, but then Friday we went back into the bear again. You can see we made some fresh lows. We were staying below 40 and can't really get above 50. So that's likely to continue with the weakness in the other markets. You can see on the 15-minute chart, we tried to make a higher low. We did not make the higher high. So there's still underlying weakness here. I don't really have any great entry points except this rally base drop with follow through. That looks really solid at 43.49 to 43.61. Again, somewhat wide. So if you need to break it down to kind of fine tune the entry, you could maybe go down to a 5-minute chart if you happen to trade this or trade a different security. And actually, even on the 5-minute, it doesn't change much. You have just a slight adjustment here. But you're still looking at 43.50 to 43.61, 11 points for that zone. So lots of volatility, lots of risk. So maybe you enter with more confirmation. Just be a little bit patient. As far as the target to the downside, there is an initial, no, I'm not going to call that demand. I was thinking there was something here. Yeah, drop base rally, but it doesn't break out of this high. It does break out of this one. So maybe you get a pause there. You do have, like I said, drop, base, and rally. 43.08, 42.98. This has already been tested. So looking back, if we continue to drop, let's see where else we might get some targets. Wow, all tested right there. I'm not really surprised. I think overall we are going to be entering into a bearish market, possibly even a recession in the U.S. economy. So we'll see what happens. Definitely have overall inflation that's out of control, and we need to, we'll see at the Fed. They've been kind of asleep at the wheel, but when they start raising rates, it's probably a little too late. Let's see. I don't see anything else there as far as good demand. That was already too long of basing anyway. So we can continue to march downwards. And we've got a little demand right before our bigger time frame. So it looks as though we can continue pushing down quite a bit here and just look for new supply zones to be able to short and get in. If we do end up rallying up to that 43.50, great shorting opportunity. If not, might be able to play some of these breakdowns or see if new zones form along the way. But you can see we could drop from 4,300 to 41.80 very, very quickly. There's nothing along the way to hold us up, even if we go into larger time frames. So finally, let me go to the Dow here. I'll go back to a daily chart. And start off with a clean chart, of course. Once again, very weak market. You can see we've got a little bit of bullishness coming back in to kind of flatten out the trend, but overall very bearish. We do have an overhead supply zone on the daily that's still very strong, 34,558. 35060. Going to the 4-hour time frame, I don't have any good zones nearby. Nothing. Nearest thing would be rally base drop. Not very strong, but it's just in front of the daily zone, so that helps it out a little bit. Rally base drop, 34,700 to 34,960. And our first area of demand that we run into on the 4-hour, 32,500 to 32,167. And once we break that, let's see what we got. Nothing on this time frame. Okay, so back to where I was, and we'll just drop down in smaller time frames, see if there's anything else along the way or any trade opportunities. So we go down to the 60-minute, and on the 60-minute, well, we do have rally base drop, but that was already tested. Nothing else fresh right nearby, but we do have that overall bearish trend, and therefore I'm going to be looking for shorting opportunities starting Sunday evening, going all the way through the week. Just looking to see where I can join in on the shorts. And you can see right here, rally, base, and drop. That's a great shorting opportunity, 33,659 to 33,746. The only issue is we may not want to short the strongest market, right? Typically want to short the weakest. But there's also 33,830, but this can give you the clue as to when the markets are ready to drop, because if all the markets open up and start to rally upwards on Sunday going into Monday, then the leader here, the Dow, which is the strongest market moving up, will tell us when everything's ready to fall. And it usually will happen when you get to a good supply zone. So we've got two that we can look for, the 33,659 and the 33,830. So overall, seeing that there's going to be a lot of bearish opportunities this week in the market, be safe with your trades. Wait for a little extra confirmation. There's been a lot of volatility coming into these markets and big swings, bigger zones, so you may need to drop the lower time frame to kind of over, or maybe somewhat compensate for the increased risk you are taking in the markets. So until next time, trade safe, trade well, everyone. Take care.